just want to extend a warm welcome to all of you. Thank you for spending valuable time here to learn about this topic that impacts us so greatly. As we gather over our shared interests as property owners to discuss matters that affect us deeply, our properties, our investment, and our future. My name is Elaine McIntyre Kim, and I'm thrilled to serve as your host for the evening. I work as the Beach Cities multifamily and 1031 specialist at Centennial Advisers, and where we strive to provide exceptional service to our clients. I graduated from UC Berkeley and managed properties for about a decade before I went into sales. I have 3 young children, a beloved cat named Honey Meow Meow, and I'm a proud local. And speaking of Centennial, allow me to tell you about them briefly. It's a commercial real estate firm that has all types of products, not just multifamily. And it was established by Justin White, where is he? Over here. A former VP at Marcus & Millichap and a regional director in the Pacific Northwest for over 25 years. Justin's passion for delivering top-notch service led him to create a company where clients would never feel like just another number. His guiding principle is simple yet powerful: to always act in the best interest of the client, the advisor, and the firm. He's trained over 500 agents and brokered thousands of deals throughout his career, and he's going to provide us with a quick market update.
Thank you, everybody. As Elaine said, we're predominantly a commercial real estate firm, but I think what probably sums up how we try to do business best is that we're here today talking about a topic that is not related to anybody's office building, industrial property, or 20-unit apartment building. And the main reason being is that we try to help families do better with their investments and do the best they can. And if it's something like this, if it's something down the road or questions that you have, we're happy to help. I think what's really neat about who we are and what we do is that we have people like Elaine on our team who this topic, for somebody who sells a lot of multifamily, is only out of passion and only out of wanting to do the best for people in her community. And I think that's what makes us different and special from a brokerage firm if you ever need our service. But she asked me to be quick. I'm going to quickly talk about some things that we're seeing in the commercial real estate marketplace that maybe applies to some of you that just own some multifamily or single family, which I guess that's my number one, that the legislators are not on your team anymore. If they ever were. In my 20 years of experience, I've not seen a law favorable to a commercial or mom and pop property owner, and I don't think that that's going to get better anytime soon. Whether it's no fault eviction and the things that we see on the residential side, if they're not already in single family, they'll probably be there soon. You got to have real strong cities to fight against it. Huntington Beach, for one, is one that is doing its best, but those things aren't good. And if you own commercial property, whether it's going to be restricting who goes there and what they're allowed to do, or more fees and assessments, I think we're going to see that. So number one is it's not a great environment right now, which probably leads me to my number 2, is that it's not the passive game that it used to be. The big corporations, institutional property investors aren't affected by any of these laws because they aggressively manage and operate their properties. They get tenants out, they're always increasing rents. They don't mind a vacancy because they're always trying to increase the value of the product, not necessarily just maintain some cash flow. So they're not really affected. They're usually the biggest funder and fighter for the laws that are disadvantageous to mom and pops, but it doesn't really affect them. So you got to be an active operator of property to continue to succeed in the way that people have over the last 20 years. And being in the business, it has been my great fortune to meet with a lot of families and hear their story of starting with one building where the couple was painting the property on Tuesday nights and whatever, and then renting it out, and now they have a portfolio of 120 doors or 500 doors, or their kids are involved. This best part of my job is hearing that story and being able to help somebody continue to grow. It's just harder now. And so being on top of all of the different legislation, working more aggressively to operate, to navigate your NOI are all things that we're seeing people successfully change and alter their business strategy from just the partnership that it used to be between mom and pop owners and tenants. It was pretty cool back in the old days where the tenant lived there for 20 years, they took care of some minor problems, they didn't cause you any problems, they paid the rent, you go pick it up, if they were a little late, no big deal. All those things are different now. And I think that's just probably the expectation that we have to have going into it. For those of you that follow the real estate headlines and the commercial real estate market is, terrible. Office is bad, big downtown towers are really bad. But I think office-wise, what we're gonna see is we're gonna see a lot of the suburban product continue to be really popular. And the large downtown towers, a very small percentage of them will get converted into some sort of residential, but they're really not, they weren't built that way in the 50s or 60s to accommodate that change. But I think what we'll also see in office is that as we get further away from COVID and more people graduate from college who didn't work from home 5 days a week in their bathrobe, then vacancy will probably go down a little bit in office, and that'll start to come back. You are seeing some of the biggest investors in real estate buying these office buildings that are 70 or 80% vacant at steep discounts, because they are also long-term believers in office coming back. There are transactions, if you are considering or wondering where the market's at, there is a robust amount of buyer activity. I would say that I think people that are doing 1031 exchanges are winning right now. They have much less competition, and they're going to be buying at a significant discount, usually in a larger property or a better located property than what they're selling, and you kind of win the game doing exchanges when the market's like this versus when the market's super hot and there's all kinds of people that are watching infomercials and get into the game. I think I got one more. I got that one. Maybe that's all I've got. I know we're all here to hear Susan and talk about Prop 19 and how we can protect our families in light of what's going on. And I personally, super cool, 25 years of being in the commercial real estate business. When you get started in it, you read all these things about the Howard Jarvis Tax Association and what they do and all that. And to have somebody that's at our event that is with that organization seems pretty cool to me. So I'm looking forward to it. I think Elaine's got a couple more comments and then we'll get started. Thank you, everyone.
I just want to take a minute to thank Justin, our remarkable managing partner. His vision and dedication have been instrumental in making this event possible, so thank you. And thanks to our regional director, Tom Watkins, our director of operations, Camille Moniz, and our digital media producer, Manny Grisella, over there. Thank you so much. You're all vital, so vital to the success of our company. Thank you so much for being here. And also, I just want to thank my husband, Davian Kim, who really helped a lot with tonight. He provides unwavering support to me, but he's also an incredibly talented muralist. So if anyone's here to looking at add a touch of artistry to your property, Dave's your guy. I just wanted to turn your attention to some topics. There's some flyers on your table. There's some new legislation that's making the rounds around committees right now. Just briefly, SB 567, they're trying to strengthen AB 1482, which passed a couple of years ago. That's what set the state rent controls to 10% with CPI. And then AB 12 is a new one, and they're trying to limit the security deposit to 1 month's rent. So be on the lookout for those and what's going on with those. And also legislation that's passed, the balcony law, it affects any property in the whole state of California that's 3 units or more. And there's a deadline, January 1st, 2025. And two of our sponsors, we have Ron White of Jack Doctor in the back who can answer your questions on balconies and the rules and regulations around that and how much. If you need an assessment, he's happy to help you. And Lindsay Bedell of Expert Building Ops, Property Management. If you need any property management or have any questions, please feel free to talk to them before you leave. Now for the heart of the matter. Prop 19, narrowly passed in 2020, and it's thrown a wrench into a lot of the state plans. Probably everybody is a state plan. Property owners of every stripe, it's taking away the way they can build economic security for future generations, and I think we all are feeling that. It's regrettable that no major support is in the legislature right now. It's stark contrast to 1986 when they voted to place the parent-child transfer exclusion from reassessment on the ballot. That was Prop 58, and that passed with 76% support as a safeguard. Until Prop 19 took that protection away, and now it's the largest property tax increase in California history. Even Jeffrey Prang, who's the Los Angeles County Assessor, and he's a sharp critic of Prop 19, and he's emphasized the detrimental effects it has on property reassessment, posing a threat to long-standing family homes and businesses too, because it affects all commercial real estate that have been built over generations. So tonight, We have the honor of hosting a speaker who is deeply knowledgeable on these matters. She's Vice President of the Howard Jarvis Taxpayers Association, a columnist and member of the editorial board of the Southern California News Group, which includes 11 newspapers and digital editions, including the LA Daily News and the Orange County Register. She's known for her common sense perspective, blending deep research, clear thinking, and occasional humor to shed light on complicated issues. Susan has a vast repertoire as a speaker, regularly addressing groups, bringing her wealth of knowledge to the forefront. And she was not only a former candidate for California Assembly, but an author of many books. The fun fact, she got her start as an associate producer on Jeopardy! We're very fortunate to have her tonight to shed light on the implications of Prop 19, its impact on property owners like ourselves. Ladies and gentlemen, without further ado, give a warm welcome to Susan Shelley.
Well, how am I going to live up to that introduction? Let me take this out. Thank you all for coming. It's a pleasure to see you. I bring you good news. I'm going to announce for the first time anywhere that today we filed our initiative to repeal the portion of Prop 19 that is a death tax. It's just happened late this afternoon. It's probably not even on the Secretary of State's website. We'll probably have a press release tomorrow about it. Here's what we're doing. We're going to restore the old rules, just in a nutshell. We're going to restore Prop 58. We're going to restore Prop 193. What those were, if you're not very familiar with it, you know that Prop 13 holds your assessed value level so that it doesn't go up with the market. It only goes up maximum 2% a year with inflation. That's what Prop 13 does for you. And then when people started inheriting property after it passed in 1978, they were getting taxed out of it because inflation was just driving the prices up. And people were being taxed on the market value of the property when it was transferred to the kids. So intense was the pressure, politically, statewide, both parties, that unanimously the legislature put on the ballot the parent-child transfer exclusion. Unanimously. That never happens. But that's how intense the pressure was because of the inflation effect on assessed values. And that's what's happening again now with Prop 19. Because Prop 19 repealed what was passed unanimously. Now it's gone. 10 years after that was Prop 58, and 10 years later, the same rules were extended to grandparents and grandchildren if the children's parents were deceased. So we're putting that back too, because Prop 19 repealed both of those, while everybody thought it was about wildfire victims and seniors moving to a new home. And it was, and it did, and we're leaving that alone. We're not changing that. But it had this other part. Somewhere in the language on the ballot, it said changes to family property assessment. Didn't tell you what the changes were. Didn't tell you it was the biggest tax increase on property in California history. Didn't tell you that. And people didn't know until they started getting the letters in the mail with the sympathy cards that their property was going to be reassessed to market value. There's only one exception in Prop 19 for that, and that's if you inherit your parents' primary residence and you move into it within 1 year and make it your primary residence, then you get $1 million of extra exclusion. It could still be reassessed. You could still get a tax increase because $1 million doesn't go that far in California real estate, especially around here on the coast. So people were getting tax increases even if they moved in and were being forced to sell. And the other part of Prop 58 that was really important affected family businesses and rental properties. If somebody had a duplex, if somebody had a small apartment building, under Prop 58, you could transfer up to $1 million of assessed value of other property to your kids. Your home of any value, and up to $1 million of assessed value of other property. You could transfer both those things to your kids. It did not count as a change of ownership, and it was not reassessed to market value. We're putting that back. You bet. So what we're going to do is we will have a one-page petition. We've had 7 lawyers working on this for half of the year. We're going to have a one-page petition that you will be able to download on your computer, print on your own printer, sign, fill out the little declaration of circulator at the bottom. If you signed a petition before, you know what that is. It just says, I certify that I am the person that just signed this, and you date it, you put the county down or the city, and it's very simple. one 8.5 by 11 page. You download it, that's a legal petition. It'll have the right margins, it'll have the right font size, it'll meet all the legal restrictions that they have in California for legal petitions to get something on the ballot. And then you send it back to the Howard Jarvis Taxpayers Association, and we need about 875,000 valid signatures to get that on the ballot for November 2024. And then we will have retroactivity. You will get your old property tax assessment back. If anyone who was reassessed during this period when this was in effect, when Prop 19 was in effect, anyone who was reassessed for a parent-child transfer or a grandparent-grandchild transfer will get their old assessed value back again. We can't get refunds of any taxes that were paid while it was in effect. We can't do that. And we can't reverse any sales, and we can't do anything about people who change their trusts. We can't, that's out of our control. But what we can do is get you your old assessment back so it will be like it never happened. That we can do. And so I will be back to tell you when those petitions are ready. I think we filed today. We have to get the title and summary from the Attorney General to put at the top of the petition. I think that takes 2 months. So somewhere around the middle to end of August, we will be ready to start signature collection. Write this down, repealthedeathtax.com. Repealthedeathtax.com is where you will be able to get the petition, all the information. And you can become a member of the Howard Jarvis Taxpayers Association if you're not already, and get on our list, and you'll get all the mail, and you'll get our newsletter. We do a little newspaper called Taxing Times, which I write and edit most of, and that's always really informative for property owners. So whether you own residential property, or you own an apartment building, or you own a business property, these things that they're doing in California are killing you. They do not like property owners in the Sacramento legislature, in the legislative community. They do not like property owners. They think that everybody needs to be taken down a peg. And they work on that day and night. Well, no thank you to that. You know, property rights are very important. Property rights are the foundation of freedom. Property rights are in Blackstone's original fundamental rights of individuals. This is a big deal. Life, liberty, property. And when the government can come in and pull all the value out of your property, or tax you so much that you have to sell it, that is a devastating thing. In many communities throughout the state, many communities of color, communities that are just now getting on the ladder of economic wealth building generation to generation, this is knocking them off of it. Because if someone owns a family home in a place like Inglewood, where all of a sudden they build a stadium and everybody's property is worth more than $1 million, and somebody inherits it, they've got to come up with that 1% of the market value every year as a condition of keeping it. Whereas under Prop 58, they could rent it out, they could keep the same tax bill. It's enough of an expense to own rental property with maintenance and all the rest of it. So you'd be able to keep it, you'd be able to start to build some generational wealth. Let me tell you, people are pretty upset. They're upset in every ethnic community in California where immigrants have started businesses and then the businesses are passed to the next generation. And if they own that property, reassessed to market value. All these restaurants, how are they supposed to make it? 3 years of pandemic closures and all the rest of it. And now this. It's outrageous. It shouldn't be happening. It was a deal that was made in Sacramento between various interests, special interest groups, and they're all really happy with it. We thought that we would get the legislature to try again to repeal this. We had a measure called Senate Constitutional Amendment 4, which would have been similar to what Prop 58 was, a legislative constitutional amendment that could have gone on the ballot with a 2/3 vote in each house. It got into its first committee, which we thought was a good sign. They didn't just kill it immediately. But then they had one hearing, and despite the fact that there were literally hundreds of people who came, waited in line to speak, who called in during the hearing, who talked about how this was affecting their families, who talked about how unfair it was, who talked about all the tenants that are going to be evicted when these little apartment buildings, these mom and pop apartment buildings are inherited, and no one can make that business pencil out under rent control, and those buildings are sold, and the tenants are evicted, and something else is built there. They heard all this, and they still voted. No, we made a deal. We made a deal with the firefighters. We made a deal with the California Association of Realtors. We made a deal. We're sticking to it. So we haven't given up that they might restore it. We had bipartisan support. We had several people who were very intensely interested in doing this. It's still possible that the legislature could bring back SCA 4. They granted it reconsideration, which means it's not technically dead. But we're going ahead with the initiative anyway. If they put it on the ballot, they could get it on the ballot in March, in primary. If we put it on the ballot as an initiative, it can only be on the ballot in November. So we're going to get this on the ballot in November. One way or another, this is going to be on the ballot. We are not going to let this go. And the Howard Jarvis Taxpayers Association is here for you on all these taxpayer issues. We don't do anything else but protect taxpayers. That's it. We don't take any government money. We don't take any corporate money. We just protect taxpayers. And it's a really great organization. Does anybody here own property in the city of Los Angeles? Want to hear about Measure ULA? Sure you do, because we're going to fix that too. Measure ULA is the so-called mansion tax, which is a 4% tax on the sale of property above $5 million and a 5.5% tax on the sale of property above $10 million. So that affects commercial property, apartment buildings, not just mansions. It's all kinds of property in that price range. And that is an illegal tax, and we are suing to have it invalidated. We have a very strong case. And so if you sell property in the city of Los Angeles, or if you're advising anybody who sells property in the city of Los Angeles, tell them they can file a claim for a refund of the Measure ULA tax. And when it is invalidated, whenever that is, you can get your money back. Isn't that a cool thing?
So it's a city of LA. I was thinking it was the county of LA.
It's just the city. This was on the ballot in November. It's just the city of LA. There was another one in the city of Santa Monica. There's also a lawsuit against that one. I'm not too familiar with that because that's not a Howard Jarvis lawsuit. But there is a lawsuit challenging that. It's GS in Santa Monica, another transfer tax. Unconstitutional. We're going to fix this. You know, we have direct democracy powers in California. We have the initiative, which means the voters can write the law and put it on the ballot and enact it without the legislature. We have the referendum, which means if they pass a law and we want to get rid of it, we can collect signatures and stop the law from going into effect. We can reverse it. And we have the recall. And the recall is useful not just at the state level, but also at the local level. So if you're finding that your city council members or your county board of supervisors are not doing the job, give them a call and tell them that you're looking into doing a recall petition. You'll get your phone call returned. It's really very useful for leverage. It's difficult to do it. You have to go out and get a lot of signatures. You have to get it on the ballot. But we have direct democracy powers. We are not helpless against all of this stuff that's being thrown at us. And the Howard Jarvis Taxpayers Association has always been at the forefront. Prop 13 was an initiative. Got on the ballot with signatures. It took 5 tries. 5 tries before people believed Howard Jarvis when he said, you know, inflation is going to push your property taxes up to the point where you're going to have to sell your property. And people said, no. And then it happened. And everybody in California, except the voters, was against Prop 13. Everybody in government, everybody who had to do business with government, all the special interests, they were all against Prop 13. The scare tactics were tremendous in the 1970s to try and stop that from happening. They even put a competing measure on the ballot. The legislature put a competing measure on the ballot to try to trick voters out of voting for it. Didn't fool anybody. That one went down to defeat, and Prop 13 passed with almost 2/3. And it is still protecting you. It cut the tax rate to 1% statewide. Prior to Prop 13, the tax rate was 2.67% statewide average. Imagine if you were paying property taxes right now under the old rules. Imagine paying 2.67% of the market value of your property every year as a condition of keeping it. We'd all be in Texas. Property taxes aren't that great a deal in Texas, but they have
they're covered.
but they don't have an income tax, so it's.
If I own a house
If you own a
and
house,
one child of mine after I die
God forbid.
would be inherit my home, how that one would work?
Okay, if your principal residence is given to your child and it doesn't have to be at time of death, it could be a gift, it could be a transfer of any kind. If that child moves into your property, this is your principal residence only, doesn't apply to any other kind of property. If your child moves into the property and fills out the paperwork and says, this is my primary residence, for as long as the child lives in that property, here's how Prop 19 works. It's essentially, supposedly not reassessed to market value. You get a break, but it's only $1 million of coverage, of exclusion. So let me give you an example.
$1 million
It is very confusing. So let me give you an example. Suppose you have a house that you had for a long time and the taxable value is $500,000 because it's under Prop 13 and it's on your property tax bill, your taxable value is $500,000. And you transfer it to your child. Now, you get an extra $1 million. So if the current market value is what your taxable value is plus $1 million, in this example, $1.5 million. If the market value of the property is $1.5 million, no tax increase, okay? If it's $1.5 million or less, because you had your $500,000 assessment and your $1 million extra exclusion because the child moved in. If it's worth more than $1.5 million, then everything above that is reassessed at market value. So 1% of all that extra value is added to your $500,000 assessment. Follow me? And that's your new base. So you don't follow me? Okay. So let's say it's worth $2 million. Okay? And you have a $500,000 assessed value. You get your $1 million exclusion, but there's an extra $500,000 of extra value. 1% of that $500,000, somebody do the math. $5,000. $5,000. Okay, so you have an extra $5,000 annual tax increase. So you have your new, let me see, the $500,000 is added to your $500,000, so your new taxable value is $1 million. And then you owe 1% of that every year. That's your new Prop 13 base value. Did I explain that right?
Yeah.
Okay.
And Susan, quick follow-up there. Is it reassessed every couple of years after that, or is it only at the time of transfer?
Only at the time of transfer, and then it's just as if it was a Prop 13 protected sale. So that's your new Prop 13 value. That can't go up more than 2% a year until the ownership changes. So that's the way that works. And that's why people in really high value areas, the $1 million is not helping them. The $1 million, I believe, is adjusted for inflation every year, so it will gradually be more than $1 million, but we're hoping to knock it off the books and then it won't be anything. And then you'll transfer your home of any value to your kids without reassessment.
Now, second question.
Second question.
Then the rest of my properties are rental,
Mm-hmm.
and the other kids are getting the rental values.
Okay.
How that one?
All the rental properties are reassessed to market value at the time of transfer. Even if they move into it, it doesn't matter because it wasn't your principal residence. So that's the way that works.
Follow up on that, Susan. She gives the first one, then she moves into the other one. Can she do it multiple times? Give her personal residence to the kid?
You can, yes you can. Now, the Prop 13 value on the house that you move out of, you're going to lose. You can transfer your Prop 13 value to your new home. You can only have the Prop 13 protected value on one residence. Okay, so if let's say you live in a house in Santa Monica and you want to move into a rental in Manhattan Beach, you can take your Prop 13 base value from your house in Santa Monica if you're over 55, you can take that with you and apply it to your tax bill so that your Manhattan Beach taxes are essentially not raised. You get that tax break for the transfer of value. But you can only have it on one. So one of those properties will be assessed at market value. And then whichever one is your principal residence, you can bequeath to your kids or give to your kids, and they can have the advantage of the Prop 19 break for moving into it. But here's the interesting thing. If they ever move out, boom, it goes right back up to market value as of the date they move out. So if you inherit your parents' house and you want to live in it, But at some point in the future, you have a job offer in some other location and you want to move somewhere else, but you don't want to sell it. So you move somewhere else and you keep it, the property tax bill is going to go up. So if someone has the opportunity to go work for 2 years in another city and they want to keep the house and come back to it, too bad, it's going to be reassessed to market value when they move out of it. And then when they move back into it, they're stuck with that higher tax bill. Many times when people do an initiative, experts will tell them, you have to raise $10 million just to get it on the ballot, and maybe more, maybe $16 million. It was difficult during COVID, and it was more during, for some, whatever, it's raining and it's more, whatever. If we can do this electronically, it's a new world. We could do all kinds of things. We could fix the budget process in Sacramento, for instance. In 2010, the vote to pass the budget was changed from a 2/3 vote to a simple majority, and they've been spending us into poverty ever since, because there were no breaks. There was no checks and balances on it at all. All they need is a simple majority. They can spend whatever they want. We could put that back on a one-page petition. We could do voter ID on a one-page petition. We could do all kinds of things on a one-page petition. We could cut the sales tax. We have the highest sales tax in the United States in California. The state sales tax is 7.25%, and then they add local taxes on top of that, and people are crushed by it. And as prices go up, the government's happy because the sales tax revenue goes up. Are we happy? No, we're not. We could cut the sales tax on a one-page petition. And having that leverage is very important. Because now we go to Sacramento and we say, we can do this. Let's talk. That's something we haven't had in California in a long time. Because this is a very expensive state for politics. Very expensive to run for office, very expensive to buy advertising, television, radio, mail, a lot of people to reach. It's very difficult. And things have gotten not so great as a result. Not so great in California. There are a lot of problems that can all be fixed. All of our problems in this state, all of our problems in this state can be fixed. If people are engaged and they have the tools to do it, and they believe they can do it, and they stop being discouraged, and they cancel the U-Hauls, all of you cancel the U-Hauls. I don't want to hear anybody go to Arizona. We're going to fix this. So with that, any more questions?
First, I just want to say thanks for coming out, and I appreciate Howard Jarvis Tax, the whole company, for what you guys are doing, because it's really sad how this really affects every nationality, every income bracket. But I did want to say, the numbers you were running for her, I think we ended up with the wrong number.
Okay, what was my number?
Well, let's just go at a $3 million value.
Okay.
You get $1 million off, so you'd be reassessed at 2.
No, it
I'm sorry,
depends.
you pay.
Like,
It depends on what your assessed value is.
Right,
if
so
you-
say it's assessed at 3 million.
Assessed at 3 million,
So you
okay,
get
and the
$1 million.
market value is what? If it's assessed at 3 million,
Wouldn't
see,
that
this
be,
is the Prop 13 assessed value that makes the difference here. So you could have a house that's got a $3 million market value,
Right.
but you bought it so long ago that you're only paying taxes on the $500,000 house.
But if your parent were to pass away and hand it to you, it gets assessed at that value that day.
Right.
So-
But under Prop 19, if you're going to move into it, you keep their $500,000 assessed value under Prop 13.
I see, okay, my bad.
And then you get $1 million of exclusion on top of that. But in your example, where it's worth $3 million, $1.5 million is a new assessment.
Got it, okay.
Added to your $500,000. So it'll be lower than if you were reassessed at
Right.
3 million, but not that much. There are several things that have been defined as not a change of ownership. And Prop 58 was one of those things. The parent-child transfer, as we described earlier, did not count as a change of ownership. It's not a change of ownership under the law. Now, this is not in Prop 13, this is in the Revenue and Tax Code. If you have property and it doesn't, a 50% interest doesn't go to anybody, then it doesn't count as a change of ownership. This is what's known as the Dell loophole. Siblings, trusts, various things, and no entity got 50%, and it was litigated out the yin-yang, and he won. It was not considered a change of ownership. That's a completely separate thing, and that's a really complicated and expensive thing. If you're going to try anything like that, wear a helmet. Wear a protected cup, get a lawyer, get a couple of accountants. That's very risky because they can disallow it and you might lose in court. So if you have questions about specific complicated property tax matters, I suggest that you go to the Board of Equalization website. Now, the Board of Equalization is our elected tax board. And by the way, there's an effort in Sacramento to abolish it and have it all taken over by the Governor's Department of Finance. We don't want that. We want to keep the Board of Equalization. If you go to boe.ca.gov, boe.ca.gov, you'll see their property tax department. They have a phone number, they have an email address. They will answer your questions about specific property tax situations. I want to say a word about trusts. We were talking about trusts with someone here a little earlier. The assessors look through the trust. So trusts never protect you from property tax reassessment. They never did. It was Prop 58, the parent-child transfer exclusion, that was protecting people with trusts. So that's the thing to remember. Trust may protect you from other types of consequences, but it does not protect you from property tax reassessment. The assessors look through the trust to see who is the present beneficial owner.
When you do a parent transfer to a child, can you do 2 children that can live in the house?
If you do a parent-child transfer and you have 2 children, any one of them can live in the house and you qualify for the
If one
519 rate.
decides to move out and the other one still stays there, the property will not be reassessed.
Correct. As long as one of the eligible children is living in it
So I
as
have
a
a
primary.
whole, everybody lives there. If one wants to move out.
Exactly. If everybody lives there, as long as one eligible child lives in the property, it's eligible for that Prop 19 rate. Yes.
This is a sort of off the point, but I had heard that you also have to be in your house when you die.
This is disputed. The Board of Equalization has taken the position that if someone moves to some sort of a care facility
Yes,
in their
that's what I
older
was
years,
asking about.
that the way Prop 19 is written, and according to Jeffrey Prang, it's written so badly he called it a dumpster fire. According to Prop 19, you would lose that because your home would no longer be your principal residence.
Yeah.
But the Board of Equalization has issued guidance that says they're not going to read it that way. So that if people go to a care facility, it does not mean that their home was not their principal residence. So you can check on that. If anybody in your family is in that situation, you want to check on that, call the Board of Equalization and ask them. It's legally uncertain because the thing was written so badly, but we're going to get rid of it, so hopefully that won't be an issue much longer. Yes?
So I have a question. For the income properties that are owned, managed by an LLC, but also that LLC is owned by a trust, how is this going to be transferred on the taxes?
LLCs are different than individual ownership of the property, so this might not be an issue at all, but talk to a lawyer. Because if you have an LLC that's owned by a trust, and if a court could look at this, or the county assessor's office could look at it and say, well, this individual is the owner and this is all just paperwork, they might disallow. Nobody really knows, to tell you the truth. This is all so uncertain and it's such a mess. And Assessor Prang has talked about this at great length because people are making these irreversible decisions about selling property in this climate of legal uncertainty. And the assessor's office is, I think, a year behind in processing all of this because they've had to wait for clarifying litigation. And then the clarifying litigation only got to about 10% of the muddy issues. So it's a dumpster fire. It was just one of the most deceptive political campaigns that I have ever seen. Completely tricked the voters. People had no idea this was happening. It's outrageous.
Yeah, it was really sold as helping elderly over 55 to move
Right.
multiple times, and that's all they talked about.
Right.
My question is though, if you were to buy a brand new property today,
Mhm.
is there a way to put your child on that deed and not deal with any of this for their future?
No, because when one party leaves the deed, then that's a change of ownership.
Well, what if you
so-
brand new property, you just bought it?
Right,
Yeah.
but at the time that, years later when this becomes an issue, 50% of the property, let's say it's 50% owned by the parent and 50% by the child.
Sure.
The 50% that's owned by the parent could be reassessed.
Okay. But at least half.
Yeah, at least half.
Okay.
But if you transfer anything now, if you put someone, this has always been the case, if you put someone else's name on the title now, if it's not a parent, if it's a sibling or something, that counts as a change of ownership. One of the things that, there are really two things that were, I think, completely not foreseen. One of them is that when people inherit a house and they want to sell it, or an apartment building or whatever, and they want to sell it, you can't do that on eBay in 7 days. It takes time to sell a property and to close escrow. And for the whole time that you own it until you close escrow, you owe the new higher property taxes. Very burdensome on people, really rough. With the parent-child transfer, you had that $1 million exclusion on other property and the full exclusion on the principal residence. And however long it took to sell it, your property taxes were the same as what they had been. Well, now that's not the case. Now from the date of transfer to the close of escrow, you owe the higher taxes. So that was one thing that people didn't figure out.
I'm literally selling a property in Hermosa in a month that is that situation. The father died in December.
Yeah. It's painful. You know, it's a lot of money. And it's not necessary. Do you know how much money the fire department has gotten from this measure that was supposed to fund the fire department? None is the correct answer. For $1,000 in control of the board, 0 is correct. Yeah.
Can I ask one question?
Yes.
And I'm sure that this is illegal, but I've got to ask anyway. What's to keep, let's say, you get reassessed to the trust, what's to keep you from, to sell it to, let's say, your daughter or somebody within the trust at a lower rate, therefore making it, that's the actual value? Because I did sell one property and that was never assessed, I was never taxed. I did it within the year after she had died. But what's to keep you from doing that?
Well, the law is that the taxes are on the fair market value. The
Right,
full
but
cash value.
if you sell it at that value.
No, you could sell a property within your family for $1.50.
I'm not talking about $1.50,
But
I'm talking about actually.
Regardless, the risk is that the county assessor will look at that and say, that's an inside deal, that's not full cash value. And then they have the right to reassess you at full cash value because that's the law. So that's how that works.
Who sponsored Proposition 19?
Who sponsored Proposition 19? That came to us from the California Association of Realtors. This was their idea. They spent $55 million, I think it was, to get this passed. The Howard Jarvis Taxpayers Association spent about $45,000 fighting it. We were very, how did it pass? It almost didn't. We almost beat it with $45,000, which was interviews and yard signs. That's what we did, interviews and yard signs. We were really busy with the split roll measure, Prop 15. We were really busy protecting Prop 13 because they were trying to break up Prop 13 and reassess all commercial property to current market value every year. How would that work out for California? All these business properties, hotels, restaurants, office buildings, every kind of business property reassessed to market value. They're going under now. And if they did that, so we were fighting that because, after they did commercial property, they'd come after homeowners. That's the way this works. So we were fighting that with everything we had. And we were also fighting Prop 19, but we only had so much. So we did what we could. It was the COVID year. It was a very strange election. There was a lot of confusion, a lot of mail that people were sent. It was hard to hold rallies in person. It was a very strange year in 2020, and then we had all the noise in the presidential race, which is a big distraction for voters. One of the things about voting in California is that there's always a lot going on. Educating people on something that's complicated is difficult. What it was, and what the realtors really wanted was they wanted the portability part. They wanted the senior transfer expanded. Now, we already had a senior transfer in the law. You could do it once. You could go to a property that was the same value or less, and you could go to counties that accepted the transfers or stay in your own county. And that's what we had, and the realtors didn't like that because they still felt that people weren't selling often enough, and they were locked in by the property taxes. But the truth is, a lot of people are locked in by the capital gains taxes. Because if you've owned a property for a long time in California, and you sell it in California, you get hit with California income tax as well as federal capital gains tax. And that's brutal in this price range. So it's really not the property tax alone that holds people in their property. And I think the realtors are finding that out. I have not heard it authoritatively, but I have heard that many people in the real estate industry are disappointed with what they've gotten out of Prop 19. Nonetheless, they oppose our effort to repeal this part of it. I don't care. We're going to do it anyway.
How did these two measures get bundled up in this one Prop 19? It's two separate things.
It seems like the single subject rule should exclude this from happening, but the courts have interpreted the single subject rule, what's the word they use? Germane, I think is the word they use. If it's reasonably germane, the two things, if there's some nexus, then they let it go. So that's what happened there. We did look at that. We looked at every possible way to invalidate it in court. There was no way. So we're just going to go with the initiative and just get it reversed.
On the mansion tax,
The mansion tax,
that only applies to LA?
City of Los Angeles,
Not,
not
we don't want
county.
to Manhattan, Los
No, no.
Palos Verdes.
Right, City of Los Angeles.
Susan,
Yeah, I know.
The hearing, I believe,
think that that's something that we're gonna see in a lot of places.
well, that's why we have to get this. Let me explain why it's unconstitutional, and then you can tell these people not to do it when you talk to them. When you talk to these city councils, you can tell them the Howard Jarvis Taxpayers Association will slash you to ribbons if you try. So here's why it's unconstitutional. When Prop 13 passed, Howard Jarvis knew that all these city governors would try to raise the other taxes. He knew they would try to create a new tax that was the same thing that you've been paying already by another name, same tax, same people, new name. He knew that. So Prop 13, if you look at the Constitution, it's got a lot of stuff in it. It requires a 2/3 vote for state tax increases, a 2/3 vote in each house of the legislature. It requires local taxes to go on the ballot for voter approval. And it prohibits two specific things: ad valorem property taxes, which means based on value, and real estate transfer taxes. But the courts have been coming after us every time. It's like whack-a-mole. The courts come after us and they cut these little loopholes in it. So one of the loopholes was with transfer taxes. They said that a charter city, which is a city with its own local constitution, a charter city can have a real estate transfer tax as long as it's a general tax and the money goes into the general fund and can be spent on anything, then it's okay to have a real estate transfer tax. That was in the 1990s, I believe. But Measure ULA is a special tax. The money is dedicated to a specific purpose, so it's called a special tax. You cannot have, in California, a special tax that is a real estate transfer tax, or a real estate transfer tax that is a special tax. It's unconstitutional. It will be on the website, and you'll be able to direct all your people to the website, and we'll get this done really fast. Hopefully this electronic one-page petition will really work. And don't be confused that it's on the website, because electronic signatures are not what we're doing here. Electronic signatures for an online petition, that's never valid. The initiative process dates to 1911. So I always tell people to go watch the movie Funny Girl with Barbra Streisand, and if she didn't have it in that movie, we can't use it. So you have to have a paper petition with ink, and you have to send it back to us physically. Yes.
Again, I'm not too bright on some of these things. What is the property's base year value?
The property's base year value is your Proposition 13 value. So if your Proposition 13 value, so if you bought the property, I'm going to just round numbers, if you bought a property for $500,000 in 1980, every year that assessed value of $500,000 can only go up 2%. So if the market goes up 10% and your assessed value goes up 2%, year after year, you're going to have more and more of a break compared to what the market value would be. That is your trended base year value. That's what they call it. It's your original value from when you bought it, plus the 2% a year that it's been trending ever since. So what you have on your tax bill is your assessed value. That is also your trended base year value.
The assessed value.
The assessed value, right.
Assessed.
We will get this off the books. We will get this off the books. I can't promise that we'll get it done this time, but I'm not giving up on it. And I really think that this one-page petition is a game changer because it makes it much much, much faster and easier. Every petition will have room for 2 signatures, so you download it in your house, you have 2 people sign it, you fill out the little declaration of circulator at the bottom that says, yes, we're really who we say we are, you send it back to us. I think we get 2 million signatures in 6 months doing that.